I'm a 7-year-old kid, and I want to learn about investing.
Oh,
This is amazing.
that is adorable. I'm a 7-year-old kid who wants to learn about investing. Oh, that's fantastic.
Brad, kick this thing off. You have just been, someone has actually asked you for your opinion. They're not quite, they're 7 years old and they're saying, all right, fine. I'm open-minded. I'm willing to get started early. Challenge accepted. Teach me. What do you got?
Well, first, I mean, you are decades ahead of anybody else. So good for you that you're thinking about this. I know we had your dad come in with a voicemail last week, and it's amazing that your family's talking about this, and you are just going to win at life. Just the sheer fact that this is second generation FI, and you are so far ahead of the game. So I guess what I would say, and what I say to my kids is, life is made, it's so much easier if you can save money. So while we're going to talk about investing a little bit, like, to me, it really comes down to about being able to save money. So most people, really most adults, every dollar they earn, they're going to spend every cent of it. And sure, they might have nice fancy stuff, but they don't really have any money. And that limits and takes away a lot of their choices in life. That gives them so many fewer options. So for us, it really all starts with, can you save money? Can you not, every time you get more money, can you not just spend significantly more of it or spend all of it, right? Like, we talk about a savings rate, which is basically like, hey, if I earn $100 and I save 40 of it, I have a 40% savings rate. And the higher you can make that, the more choices you have, the more freedom you have, and the more quickly you can get to this point where you're free, where you're financially independent and you don't have to work anymore. So I think, to me, that's where it starts. That's where I tell my kids is, it's really hard to mess up your life if you have a 50% savings rate. So that's not to say, like, don't spend money or take everything away from yourself and just live a miserable life. Like, that is not what we want to say at all. Like, we want you to live a wonderful life, but we think you can do that and still have a 30, 50, maybe even higher percent savings rate. And I think that just gives you so many choices. And so that's like my first and most important piece of advice. And then, to your actual question about investing, I think long-term thinking over many, many, many years is really the most important thing you can do for yourself. Investing is not about getting lucky or finding this right tip that somebody gave you to buy this one stock and get lucky. That's more like gambling. So for me, it's, all right, you're 7 years old. You have a 90-year investing life, 90 years. What can you do to give yourself the best chance of being really, really wealthy? And it's saving, but it's then investing in, for us, it's this low cost, broad based. So as many really strong companies as you can buy at one time, these index funds or ETFs. So you're buying a tiny, tiny, tiny little piece of a whole lot of companies. So if you buy the S&P 500 fund, it's 500 of the biggest companies in America. And if you buy the total stock market index fund, it's 3,000 companies. You're getting a tiny, tiny little piece. You are the owner at 7 years old. You are the owner in a small, small way of every single one of those 3,000 companies. And the 100+ million people that work for those companies, they all work for you, right? How cool is that? They work for you. And I think that there's so much fun there. There's so much power there. And every time you can save money, every week, every month, every year, you're buying a little bit more of those companies. And by the time that money keeps growing and keeps compounding, it's called, from 7 to 27 to 47 to 97, or maybe even beyond, that's going to be many, many millions of dollars. And you're going to own a much bigger piece of all those companies. It's not going to be huge because they're worth trillions potentially, but it's worth a whole heck of a lot. And I think that would be my advice, is just keep putting money in, keep buying these funds that don't cost you a lot. There's nobody running this fund that's going to charge you a lot of money for their expert advice. You're just finding a fund that's buying a little bit of everything. And I think that's the advice I give my girls, and that's the advice I would give you. So yeah, Jonathan, what do you got?
Yeah, the only thing I would add to that is, I'm just thinking what conversation I could have with my, he's 4 right now, but when he's 7, when he's grown up, uh, I would probably start having conversations around, what companies or products, what products do you get excited about now? Is it a video game? I'm kind of thinking of Brian Feraldi here and how he kind of gamified this, and he goes into his kids' schools and he gives these lessons where so you really understand, like, these are actual companies. The products that you use, your video games, your toys, your tools, etc., your clothing, these are all made by companies. And to Brad's point, there's millions of people that go to work each day to make these products for these companies. They sell them, and a portion of that profit goes to the owner of the companies, like Brad was just saying. But if you can attach like a real company to that, I think it really helps make it real, as opposed to maybe a piece of the economy. That's good enough for me at this point. But I think one thing that I would add on to that is, like, if it takes making it real, maybe even something, a conversation with mom or dad where it's like, let's create some sort of pie that we're going to invest in. We're going to put our money in this, and we're going to put, something like 90% just into kind of everything, into the economy, using but let's carve out like some 10%. And I want you to tell me what companies you get excited about. And I want you to do a little research in them and tell me what you think they might be doing. And just get, are you excited about what they're, and just have some conversations with mom and dad about why you're excited about these companies. And why don't we just get a couple of those in there? That if it makes it more real for you, and you can start to realize you own a piece of this company. Next time you buy something they make, that's pretty cool. You're both a customer and an owner of that company. And then, yeah, it's just following through. But what you're hoping is, let's say you have this particular clothing manufacturer, and they make this particular product that you love, and now you've bought some of their stock. Well, what you want for them to be able to do is, you want them to be able to sell more product. You want them to be able to increase their profits, and you want them to be able to scale over time. And when they do that, when that company becomes more successful and more of your friends are wearing that clothing and that sort of thing, they make more money, and you make more money. Their company becomes more valuable, and you get that return in the form of the company being more valuable and your ownership being more valuable. So it's really cool when you own pieces of your favorite companies. When your favorite companies do really well, then your investments grow. Conversely, if the companies don't do good, right? If the companies are not good companies, and they make bad products, and they get bad customer service, and they end up having to let people go and downsize and all these things, then your money is less valuable. Now, the problem is, we don't know. Even the people that study this really hard don't always know which ones are going to do good and which ones are going to do bad. And so we just want to own a lot of them to make sure that on average we do well. On average, most companies grow. Most companies grow. On average, companies do better over time. And so this is why it might be nice to just own a big piece of the whole economy. And then if you're going to pick a few of your favorite companies, put them in a smaller little bundle, and you can buy a little bit of those as well. And that is investing for 7-year-olds. It looks a lot like investing for grown-ups.
Yes, suspiciously so, right, Jonathan? It's amazing. It's the same advice. So, all right, wonderful question. We got another one coming in here. Let's kick it up.